Hello, everyone. I'm Matt Clark, research analyst for Money Markets, here with your Stock Power podcast. Now, today's Power Stock is a huge leader in producing a key element that's used in electric vehicles and smartphone batteries as well. It scores an 81 on our Stock Power rating system. But now, before that, I want to make sure that if you have a question about a stock or the market or the economy or anything like that that you'd like Adam, Charles, or myself to answer in any of our videos here on YouTube, we would love to do that. You can email us your question at feedback@moneyandmarkets.com. We're going to put that right down below there. If we use your question in any of our upcoming videos, we're going to hook you up with some very cool Money and Markets gear for free. We've got hats, t-shirts, sweatshirts, all sorts of great stuff. We will hook you up with that just by submitting a question and us using it in an upcoming video. Also, make sure you head over to moneyandmarkets.com. It is your home for safe, sound, smart, simple, profitable investment information for your portfolio. On the site, you can check out our proprietary Stock Power rating system. Rates thousands of stocks based on 6 fundamental and technical metrics. You can create your own watch list, track your stock performance, and get all of our in-depth analysis all for free at moneyandmarkets.com. Now let's get right to it. From 2012 to 2021, the number of electric vehicles sold worldwide has exploded by 5,300%. Massive growth. Electric vehicles went from a market share of about 0.2% to 8.3% just last year. It's massive growth, and it's a trend that's really impossible to ignore. My team and I know that renewable energy is a massive multi-decade mega trend. But I'm going to drill down a little deeper for today's Power Stock. But in fact, just to kind of put a finer point on this trend, our chief investment strategist, Adam Odell, knows that EVs have got a long runway ahead of them, but he's tracking an even bigger mega trend within renewables. We're going to put a link right up above here so you can find out more about this awesome opportunity that he has within renewable energy. Now, today, I'm going to share a highly rated power stock in this episode of the Stock Power Podcast. It's a company that's a global leader in the production of cobalt. Now, a key element in these EV batteries and even in your smartphone batteries is cobalt. Cobalt makes sure that the electrodes that are used in the battery don't overheat or catch on fire, which is kind of a key thing. You don't want to be driving down the road and all of a sudden your car catch on fire. You don't want to be using your phone and then all of a sudden your phone catches on fire because it's overheating. Cobalt is a key element that helps prevent that. It also increases the life of batteries used, not just in electric vehicles, but also in smartphones. And according to a Morgan Stanley study, electric vehicles are going to make up about 81.5% of all car sales worldwide by 2050. So just in the next 30 years, we're going to be seeing a heck of a lot more electric vehicles on the road than we actually see gas-powered ones. So the need for components like cobalt to meet the demand are also going to skyrocket. Now, the chart I'm going to show you here shows the value of the global cobalt market. From 2021 to 2027, it's going to rise 102.9%. So basically, the market is going to more than double over the next 6 years. So in this episode, I'm going to share the details about a strong bullish cobalt stock that earns an 81 overall rating. It means we expect it to beat the market by 3 times over the next 12 months. The stock is Glencore PLC. It trades over the counter as it is a foreign company, and its ticker is GLNCY, Glencore PLC. It specializes in producing, refining, and marketing minerals around the world. It's a global company. It's a leader in cobalt production, but it also markets and produces copper, nickel, zinc, aluminum, and iron ore. So it's not just focused on cobalt. It focuses on a lot of essential minerals that are used in a lot of different products. Now, GLNCY scores an 81 on our proprietary Stock Power rating system, which means we're strong bullish on the stock and expect it to beat the broader market by 3 times over the next 12 months. It scores highest on our momentum factor, where it scores a 97. I'm going to get to that in just a second. But GLNCY, I'm going to screw that up this entire time. GLNCY is a great value stock as well. Its price to earnings, its price to ratios, which include earnings, sales, cash flow, and book value, are all right in line or even below the downstream energy sector averages. It's rated in the downstream energy sector, so we compare it with the sector that it's in. For example, its price to book value is currently 1.68. Compare that to the downstream energy average of 2.29. Its price to cash flow is 4.85 compared to the industry average of 5.34. And the company's price to sales is 0.33. Its peers trade at an average of 0.36. So those averages are all right below where downstream energy is right now as a whole. GLNCY is a better value stock than others in its industry, which is certainly great to look at, especially as energy stocks are becoming more in vogue nowadays. Now let's look at that momentum. GLNCY made a big 75.7% gain in share price from July of 21 to April of 22. Now, the broader market sell-off has kind of pushed those gains back, pared those gains back a bit, but the stock still remains about 20.4% higher than it was 12 months ago. The stock recently found some support and has bounced up about 5.4% since the 1st of July of this year. So just in the last couple of weeks, it started to see a little bit of price movement on the upward side, which is what we like to see when we're recommending these stocks. But what also is really telling to me is Glencore's total annual revenue picture. In 2020, the company recorded $142.3 billion in total annual revenue. Not too shabby, right? However, consider that was a 33.8% drop from the previous year because COVID-19 really halted mining operations worldwide. Workers weren't allowed to go in. Not a lot of people were selling, or not a lot of people were buying because EV production lines were down, smartphone production lines were down. So revenue overall was down total for Glencore. But the company has rebounded nicely. It's on track to have total annual revenue of about $279.4 billion by the end of this year. That's a 96.3% increase in annual income from 2020. So that's massive. That's a huge jump in just a very short time. Now, the demand for electric vehicles and even smartphones is only getting higher, as we can see. So to ensure that EVs and specifically their batteries work properly and don't suddenly, spontaneously combust, cobalt is a necessary element that's required to make that happen. And the good news here with Glencore is that not only is it a global leader in the production of cobalt, but it also is diversified in other essential elements like copper, nickel, and zinc. And bear in mind, all those three elements right there, copper, nickel, and zinc, also essential for EV production. So we have a company here that has set itself up to produce a wide range of minerals, cobalt, copper, nickel, zinc, all these elements that are key components in EV production. So it's going to set itself up nicely for what's coming to be a big explosion in the EV market. Now, let's look back at our YouTube poll question from last week. Energy stocks, as I said, have been hot in the first half of this year. We asked viewers what they thought the best energy plays were going to be in a bear market. Now, overwhelmingly, 43% said the best play was a mix of old and green energy because neither is going to go away anytime soon. And that's true. 28% that old energy stocks would continue to dominate. 13% said that renewables were great, especially at their discount because the market has pushed those prices lower. Brian added a little bit something different on our YouTube channel. He said cash. Energy stocks will be cheaper in the future. Well, Brian could be onto something here, at least in terms of energy stocks being cheaper in the future. If we look at XLE, which is the Energy Select Spider ETF, basically tracks the energy sector of the market. From its low in August of 21 to June of 22, the XLE Spider Fund has jumped 108.6%. But after reaching that high, the ETF has fallen 24.5%. So Brian could be right. The energy stocks could be cheaper later. And I think they're still going to continue to push a little lower, especially as commodity prices are also pushing a little lower along with the rest of the market. Thank you for everyone who took part in our weekly poll. Remember, you can vote in those weekly polls on our YouTube page. Just go to our YouTube page for Money and Markets, and right under the community tab, which is going to be right up top there, you'll be able to find the most recent poll. It's right there. You can find it, click on it, vote. You can leave a comment if you'd like. We'd like to see those as well. If you have a question about a particular stock or the broader market or even the economy that you'd like Adam, Charles, or myself to answer in any of our upcoming videos, send it to us. You can email us at feedback@moneyandmarkets.com, or you can comment down below on our YouTube channel. Either way, if we use any of your questions in any upcoming videos, we're going to hook you up with some very cool Money and Markets gear. We've got hats, we've got t-shirts, we've got sweatshirts, we've got all sorts of great stuff. The boss is working on even more stuff. So we'll get some of that sent your way for submitting a question that we use in any of our upcoming videos. Also, check out moneyandmarkets.com. It is the mothership. You can sign up for our free daily e-letter. We give you safe, sound, smart, simple, profitable investment information all 7 days of the week. And you can also check out my Stock Power Daily on the website there. We're also getting a process of getting email signups for that as well. In it, I give you one highly rated power stock each and every day to consider for your portfolio. These are stocks that are poised to beat the market by 2 to 3 times over the next 12 to 24 months. So you want to check that out as well. You can do that on moneyandmarkets.com. Also there, you can check out our proprietary Stock Power rating system. You can also use the Stock Power rating system as well. You can get the metrics of thousands of stocks out there. Go to the website, and on the homepage, just in that top right-hand corner, you can type in any ticker or company name and in the search bar, and you'll be able to see the ratings of the stock, fundamental data, a stock chart. You can add stocks to your own personal watch list. You can track stock performance. You can do all that at Money in Markets for free, by the way. That stock power rating system is available to you to use for the cost of zero. So we want to make sure we provide that to you so you can start digging into the best possible investment instruments for your portfolio. That's all for me this week. Definitely do appreciate everyone who watches our videos and reads all of our stuff on Money and Markets. We do it because we're trying to provide you that best information to where you can make a profit in any kind of market, whether it's bull, bear, neutral, doesn't matter. We're out there searching for those opportunities just for you. Until next time, this is Money Markets research analyst and host of the Stock Power Podcast, Matt Clark, wishing everyone safe trading.